Good morning, traders. Manny Cabrera here, co-founder of NBC Trading Academy, with today's pre-market forecast for the Emini S P 500 future for Wednesday, August the 19th. Our items for the news this morning is FOMC day today. Our news items are right here, actually. Here we go. We start today with all day. We have OPEC meetings. Of course, we have 10:30 inventory, crude inventories. We're expecting those numbers to be a little bit negative. And of course, today's FOMC meeting minutes. You notice how the market has continued to his relentless pursuit of all-time highs. We finally got an all-time high. Market volume has totally dried up. Actually, it's actually beginning to look more like summer volume. This is the first time it starts to look like summer volume as we break below 1 million contracts yesterday. We were at 995,000 contracts yesterday, so we broke a little below it. Our averages are getting tighter. As you can see, we are at averaging a little over 1 million. HTR is drastically reducing. So you notice how we had talked about this area here. We had talked about the kind of movement we're expecting here as the market continues. It's very shallow ranges, and now we have shallow ranges followed by low volume, which means that the market moves very slowly. But as you notice, the market has relentless continuation to the upside. I can't even begin to tell you how many of these days. You can see here clearly how many of these days have closed to the upside. Had a little bit of consolidation here, but the market continues higher. Now, what's going to happen after this, guys? This is the interesting things, and to me personally, no one has that crystal ball. Are we going to continue inching up and inching up? What is the market waiting for? Is the market going to continue to go up based on the fact that it believes we have the pandemic under control and we start seeing the evidences of the economy picking up? Is the market holding its breath for the next shoe to drop? What exactly is the market trying to do? It's very difficult to tell from this perspective. We do know, however, that we haven't had any significant type of retracement and or sell-off. So next areas with the market, always look for your supports. You do have an ascending triangle here. You have this particular trend line here. This has been pretty much holding the market alongside the 20 SMA. The market can very easily retrace here. It would be a big drop in reference to relative movement, but still something that would be healthy for the market to continue its way up if it wants to do it the healthy way. As you notice, here's a continuation up. There it is, and boom, there's our retracement. You see, that's just a very healthy retracement for the market. And I think the market's probably waiting for something like that to happen. We haven't had a big buy day or a big sell day, like I said, in a couple of days. So, a couple of weeks actually. So that's something that we may be experiencing. But in the meantime, we have to trade what we have in front of us. We can always speculate about what's going to happen next, and that's important for us to know, particularly if you're a swing trader or a buy and hold trader. But we have to trade what's in front of us, and what's in front of us is a relentless continuation to make higher highs, and that's how we have to trade it. We do have a north-south bind here at this particular price level here. We can continue to expect continuation to the upside as long as we remain above this particular trend line. These trend lines here at this time level, which is an 8,000 tick chart, has really been paying off really well. It has been pretty much been painting the picture for me the last several months. It is very reliable. Obviously, we don't make trading decisions based on this as a day trader, but we do, however, use this information as evidence to sustain our expectations. Now, this is where we trade. We trade more on the 610 level here. This is pretty much where we trade. And what we have here, market, obviously there's our all-time high here in blue, intraday all-time high. Our intraday low, market breaks above it in the pre-market, and the pre-market just crashes through, retraces all the way back to this particular price level here, runs through again, it finds a lot of resistance there, and we find ourselves right in this particular support and resistance range. We have the run, there's our floor, this is our top. So we have a top, we have a bottom, and the market is oscillating between these two areas. So we know that the market can potentially run all the way down to here. Now, these new lines that you see here, red, yellow, and red, those are volume profile lines. This was yesterday's volume profile high. This was the point of control, and this was our support point of value. So support value area. So we can expect the market, if it drops through here, it can potentially test this area here. But this is what we're expecting now. We're seeing, you notice how the market, as it was approaching those all-time highs, it kind of just lingered there for a while, then it ran through, then it came back and retested. If the market returns back into this area, we can expect a little bit of this type of churning, more of this little churning, before the market makes up its mind either to try again and retest these all-time highs and potentially move higher. I'll come retest these support levels here and potentially this level here to see what happens here. And if it breaks from there, it could potentially run all the way down to this level here. So remember, FOMC day, the closer we get to that time, the slower the market is going to get. Do not push these markets. These are not markets that are easy to push. You need to wait for the deeper retracements. Make sure you place your stops and just take it easy on days like today. Just take it easy and we'll see what happens. Take care and have a great trading session.